Hi viewers, welcome to Mantan TV. Today's topic is RBI Dividend. Here with HANMANDLOO sir. Good morning sir.
Good morning.
What is the meaning of RBI Dividend rules?
Reserve Bank of India. It's called Central Bank for India, Indian government,
Yes.
for Indian nation. Generally, all banks are called, regulated banks are called central banks. The Reserve Bank is for India's monetary transaction regulator. Capital means banks, financial institutions. Those who are giving loans to be regulated by Reserve Bank of India. Even government financing also. All these are maintained by Reserve Bank of India. What we call the bank is accepting deposits. They have to maintain some CRR, cash reserve ratio, and SLR, standard liquidity ratio. So that if a bank could not pay in repayment on deposits, these funds can be used to repay the deposits like that. Because banking sector is totally depends upon the trust between the depositor and the bank. And the trust is well maintained by regulated by the Reserve Bank of India. So this Reserve Bank is also earns some income, just a commercial activity, that is by issuing bonds or foreign exchange commissions or some other services also they will provide to banks. For that the Reserve Bank will charge. For that the Reserve Bank will get profits.
Where is the headquarters of this RBI sir?
Reserve Bank of India's headquarters is Bombay. The governor stays there. The Reserve Bank governor will will be the head of the organization. The head office is at Bombay, and that Reserve Bank will take care of the monitor every financial activity, even foreign currency, foreign remittance also. Suppose we export some goods, we are getting money, foreign exchange. That also will be with the permission, with the knowledge of the Reserve Bank of India. And even payments from India also, that has to be with the permission of the Reserve Bank of India. So every financial transactions within the country, outside the countries also will be regulated by the Reserve Bank, as well as the banking activity also, financing activity, banking activity, housing finance, insurance also being monitored by the Reserve Bank of India. Insurance is, of course, insurance regulated IRDA, but the payments, digital payments, cryptocurrency, all these are regulated by the gold reserves. Everything is regulated by Reserve Bank of India.
How much dividend of RBI is going to pay to the government sir?
This year the government is going to pay around 2.17 lakh crores. Right, the government is Reserve Bank is paying to central government the highest dividend until now from Reserve Bank of India to this government anytime from independence onwards. The central Reserve Bank is going to pay 2.17 lakh crores as dividend to the Reserve Bank of India and to the government of India. And because the Reserve Bank of India has earned a profit of 2.75 lakh crores, out of this, which is 17% higher than compared to previous year. With this increase in profits and reducing the expenditure, maybe expenditure not only administrative, sometimes they have to make provision for capital fund or any unexpected foreign exchange values reduction. So all these things, the funds has to be provided, emergency fund has to be provided. For that, the Reserve Bank will contribute. After contributing that, the profit has increased, and because of reduced expenditure, the profit increased. Expenditure increased by 140% compared to previous year. So that led to in the financial 21-22, 1.33 lakhs the Reserve Bank has given as dividend. In 2023, 1,60,000. In 2023, 2,35,000. In 2024, 2,75,000 crores the Reserve Bank is giving dividend to the central government. Balance sheet of the Reserve Bank also will be having the balance sheet.
Okay.
What it is having foreign exchange assets, gold bonds, or other assets, loans and advances given to. Suppose if any state government requires money, the Reserve Bank will give money as a loan, temporary loan, as a overdraft facility, and that will give. That is also called as a asset of the Reserve Bank.
Okay.
So that value is around 70 lakh crores value. The Reserve Bank is having the balance sheet assets.
And what is the income source of RBI sir?
I told you that service charges paid,
Okay.
and interest collected and loans given, and also foreign exchange transactions they are given, anything they will do, and also the banks also will pay some maintenance charges to the Reserve Bank of India uh, for assets liquidity ratios maintained or liquid assets maintained with the Reserve Bank of India. So all this will give, all these are the income of the Reserve Bank of India.
And how much income is paid for the dividend, sir?
Out of 2.75 lakh crores, the Reserve Bank is paying 2.17 lakh crores to the central government as a dividend.
And what is the purpose of RBI, sir?
RBI, I told you earlier, the Reserve Bank of India's purpose is to regulate the financial transactions within India, a banking sector, foreign exchange transactions, gold reserves, interest regulation, means the bank should not charge addition more than that, and also deposits, interest and deposits.
Okay.
All these are private and government. All these are where even the government is having more share also, the same rule has to follow. Even the government doesn't have any share in that institution also, they have to follow the same guidelines. There is no difference. So this is the Reserve Bank is a regulator for all this, for all these sectors. And another area of profit was this transfer to asset development fund. Earlier, last year it was 1.4 lakh crores. This reduced it to 64 lakh crores, 64,000 crores. The reason is for less advances, less foreign exchange, less risk, and for that reason, the provision is reduced. Requirement of provision is reduced because of risk buffer is already available with the Reserve Bank of India. And out of this, around Reserve Bank assets also, 23% is with the domestic assets, means domestic assets that investments or loans given in the India, and remaining 76% is external assets, maybe foreign exchange bonds or foreign contributions or foreign assets. Maybe the Reserve Bank will purchase dollars, euros to meet the international transactions requirements.
Okay.
So that resulted into the good.
Which companies are regulated by RBI, sir?
There is no in the Reserve Bank of India is a autonomous body established by the Government of India, and that is just like Election Corporation of India, Supreme Court. Reserve Bank also performs on its independence, its guidelines. It will not be under the control of Reserve Bank, central government, and it will be the supporter of services. Only that will be. So it is the autonomous body. So it will take its own decisions, they implement its own policies. Of course, the government suggestion, information will be there, but final decision will be the Reserve Bank of India to finalize the guidelines. Now, the major risk for Reserve Bank of India transaction is currency risk. Currency means if you purchase a foreign euro, you have purchased 100 rupees. If it came down to 80 rupees, there is a loss, 20 rupees. If it goes to 120 rupees, 20 rupees gain. So that currency risk is there. Interest rate risk is also there. Suppose you give bonds and you have to pay higher rate of interest, but lot in the market the rate is reduced. That risk is also there. And foreign currency valuation and contingency fund transfers is a main expenditure, and that is reduced because of the less assets owned by given by the Reserve Bank of India. So all this is helping to make Reserve Bank of India more strong and able to pay higher amount of dividend to central government. The risk is reduced. The valuation of central government assets held by Reserve Bank are improving, and that is giving more strength, more buffer to the Reserve Bank of India for any unexpected fluctuations in foreign currencies, gold reserves, or financial transactions, or deposits, timely repayment of deposits, recovery of loans, loans given to state banks, either state government either when required. All these are helping. Smooth functioning is helping the government to gain more and more and to have more incomes.